Welcome to Restaurant Deal Making Exposed, the only show that equips you with everything you need to know about restaurant transactions. In this show, we tell you all about how to make the sale or purchase of your restaurant not just possible, but successful. Now here are your hosts, ex-restaurateurs and seasoned brokers, Patrick Toda and Andy Mirabel.
Hey everybody, Happy New Year. Welcome back to Restaurant Deal Making Exposed. I'm here with my buddy Andy, and today we are going to talk about market trends. What is selling and what is not? Today we are tackling a question that's on every restaurant owner and industry professional's mind. What kinds of restaurants are selling and where are buyers looking? Over the past year, we've seen significant shifts in the market, especially as the industry continues to recover and adapt post-pandemic. Changes in consumer behavior, challenges in the major metropolitan areas, and evolving restaurant dynamics have created new trends and new opportunities. In this episode, we'll dive into the types of restaurant concepts that are in high demand, how location plays a pivotal role in the successful sale, what today's buyers are really looking for, whether it's a turnkey operation or a well-established, profitable business. If you're thinking about selling your restaurant, exploring an investment opportunity, or simply staying ahead of the curve, this episode is packed with valuable insight to help you navigate the ever-changing restaurant sales landscape. So let's jump right in and get started here. Andy, how you doing in 2025?
I'm good. It started with a bang. I mean, I landed from my trip in Japan and I just rolled right into continued holiday festivities, birthdays, New Year's Eve, and work has started very quickly. I think it's same for you, right? We've been busy.
We have been very busy. I always tell everybody from Thanksgiving to Christmas, it's kind of a lull. Usually the first week, it's still kind of mellow. And then that first Monday after the new year, it's like, boom, everything just starts back up. Everybody's like chopping at the bit.
But I think that's going to play into what we're talking about today. This year is starting fast. I have a lot of new leads, a lot of new traction on good listings and such. So this is really good news for 2025 and what's happening. I think one of the things that we touched on in our year-end closeout episode for 2024 was that in 2023, we saw incremental positive changes to a lot of different markets, including some of the more urban areas where we started to see a slight uptick in transactions happening, people moving into spaces that were vacant or buying second-generation restaurants. 2024 proved to be unusual. 2023, we were at a high point of how many transactions we did. And in 2024, although we did a lot of transactions, it really felt like they were coming from all angles. There was a lot of emotion involved, and there was a lot of different types of buyers, sellers, and so on. So that really spoke to the fluctuations in the market, right?
Absolutely. Yeah, I think in some ways it was definitely a very active year. It just felt a little uglier than 2023.
That was probably what I should have said in the first place. Thanks for summarizing. So, yeah. Let's get into some of these, what do buyers want right now? Let's let you lead on that and see where you begin.
Wow. I mean, it's like, what do women want, right? So it's such a...
That's a different podcast altogether, Patrick.
Sorry. Yeah, I mean, I guess, what I'm finding is if we're talking about the Bay Area, I'm finding people are looking more in the peninsula, more in the South Bay, South Peninsula. I'm doing a lot of activity in San Francisco, but it's definitely a little bit more challenging and the price point is going to be a little lower. Also, I find, I do a lot of listings down on the Central Coast and all the way down to the Central Coast. And I have something currently in Monterey County that this listing was extremely profitable. And, I was in contract within 30 days, so I think one of the big things that I'm seeing is when I put a business on the market, when it has SDE of at least $150,000, these are what I think buyers are looking for right now. There is a ton of businesses out there that aren't making any money or just pure asset sales, either closed down or, close to close down. And those are going to be a lot more challenging. People want to buy, I think, profit right now.
I think that with all the uncertainties and challenges that, make it very hard to operate, own, and run a successful restaurant, bar, or food-related business, that I think you're hitting the nail on the head by saying they want some level of security in what they're purchasing. They don't want to reinvent the wheel with a concept. There's plenty of opportunities out there to do that because the inventory for spaces is high. But I think the security in knowing a business is done well, continues to perform well, and is on the right trajectory from 2020 onward. Those all things come into play.
And I mean, even just in this micro market of San Francisco for me, and I live in San Francisco, and I'm, very bullish on the San Francisco market. And I'm hoping, in 2025, things will start to kind of, become a lot more positive and there's no more doom loop thing going on. And we have a new mayor, and hopefully that will change things up a little bit. But I do notice that, even in San Francisco, if you look at like the Sunset and the Richmond and in the more like traditional neighborhood parts of San Francisco, these are the areas I think people want to probably be in right now versus being down Civic Center, financial district. There's kind of that major change, I think, even within San Francisco.
Yeah, I'm getting buyers now. It's a new year. People are planning for the future and looking at what the opportunities are out there. And I've had multiple buyers reach out and say, hey, I am looking at SF, San Francisco, and I am looking in these particular areas. And those areas are most likely all the same areas that you said because of that neighborhood feel, the density, delivery potential, all these different reasons. But downtowns, we still got that big question mark on because the offices are not filling up or are not filled up. We've seen a lot of articles and read a lot of articles that companies are mandating employees to come back. And although that may be the case for 2025, that a fair percentage of these office workers will come back Monday through Friday or X amount of days per week. We haven't really seen the effects of it yet, especially in downtown areas.
Yeah, I think that's absolutely true. And I do wonder, even if we had, somewhat full offices downtown, it definitely feels, I think, we always say, are things back to normal yet? And at what point do we just call it normal?
That this is normal. We're 5 years post-pandemic.
Yeah.
We'll probably be talking about this in 2030. However, let's start focusing on what it is to be now.
Yeah. And I think as a restaurant owner, you have to be kind of flexible and understand, hey, things are different now. Maybe the new is that people don't, go out for happy hour after work anymore in large groups. And, how do you create a business in this new kind of reality versus like trying to keep, like being the old person on the block saying, it used to be this way. You're never going to be successful thinking about doing business in 2019. You have to think about doing business in 2025.
We're very far away from the 2-martini lunch. Let's put it that way. Okay. Those were great days for me in SF at my restaurant where people would have 1 to 2 cocktails at lunch. That's icing on the cake. I know a lot of clients now that actually their kitchen is operating during lunchtime so they can fulfill the orders coming in from third-party apps and delivery and such, but their dining room is not open. So that's an example of a pivot that we hadn't seen given everything that's going on. We haven't seen that. But let's go back to location. I know you and I got a lead through our hopefully our podcast and website and stuff, and it's in my hometown of Sacramento. And I was up meeting with these lovely chefs a couple days ago, and they're in one of the most desirable downtown, old money, affluent neighborhoods. And hey, these guys are working their tail off, so they're considering selling. But this new-ish restaurant that's under 3 years old has good volume. They're profitable on paper, limitedly. But it was interesting to see that although they have a strong lease, their volume's pretty good and growing, profitability and so on, it's interesting to see that they're already worn out because it's hard to hire good help still. These are all still big issues. And the cost of goods is just driving them wild. I think he said he pays nearly $160 for his premium case of eggs. For a case of eggs. Do the math on it. You know what I mean?
But is that something that's like right now because eggs, there's a shortage on them right now?
That's one example, but you really can point out, 24 examples across their quote unquote controllables with their food and beverage costs that don't feel so controllable anymore. They're out of control.
Yeah. I hate to be the old guy and say, when I was doing business, a case of eggs used to cost $20.
Yeah. It was closer to that than it is to what they're paying now. Let's put it that way. Yeah. So I think we're pointing out to everyone too that, location is still paramount. It just means that the desirable location has shifted over the past years. And the new normal, maybe there's a boom in suburban upper class areas, the Walnut Creeks, the places that are home to a lot of people, but they want to have a hub for where they can eat, dine, and enjoy themselves and spend their money without having to drive over a bridge or go into downtown or to go to a place that's not safe. And unfortunately, that's an issue with California.
Sure. Andy and myself were talking about some of the more negative things in the restaurant industry. There is a lot of positive that's going on out there. I hear, many people who are doing quite well right now, but they're paying attention to the patterns in their particular area. Like I have a client and, who's become a friend, and they own a restaurant in the peninsula. I can't say where, but they're doing 5 million plus in a very, prime location, and they crushed it during the holidays, and I hear lots of positive along the way, but it's people that are paying attention to their business, their financials, people who are paying attention to their customers and figuring out how to do well where they are.
Yeah. And this peninsula that you keep referring to is not Florida. We're talking South San Francisco all the way down to, through Silicon Valley to San Jose. So, and there's still a lot of real positive things going on down there with restaurants doing high volume. So yeah, absolutely. There are a lot of positives, but paying attention is paramount, and that's going to pay off for the operator. What do we, liquor licenses, let's bring that up. It's been more of a need for more of my buyers in current day than maybe it was in the past. I feel like I think you can better control your margins, make better profits with a full bar associated with it. Of course, it can be harder to manage, but I think the benefits far outweigh the negatives on having that. So I do just really hear a lot of my clients saying, hey, I want these options for location. I don't really, I want the rent to make sense, but I definitely want a full bar option. So that's a request that's coming up a lot more than maybe it had for me in the past.
Absolutely. And when you say a full bar, you mean just having the Type 47 liquor license so that you can serve full alcohol and also have that with food. Is that what I'm understanding?
Correct. I mean, of course, people love, if someone's they see the ability, the benefit and profit in running just a bar. If that's your niche and you're willing to work the late hours, great. But a Type 47 ABC license that allows you to serve full alcohol, full bar with your food, that's been a request I see a lot of. Obviously, that's a good asset to have too, because the values of those in many counties can be quite large. So it's a good asset to have associated with your location.
I agree. And I think if I were going to buy a restaurant again, and that would be right now, I would certainly have a cocktail forward concept with food as a second part of that. I think that is where you're probably going to see a lot of success, because obviously the margins on alcohol are so much better than food. And then you could have a food program that kind of goes with your liquor program.
Would you agree with me? And there's two things I want to say here. Would you agree with me that it's easier to make a pivot with a liquor or bar program than it is with a food program? Because if all meat prices have gone up, switching vendors or a product is not necessarily going to save you a ton of money. Whereas with spirits, there's a lot of competition in that realm. So, hey, if Grey Goose has gotten too expensive, I can make a deal with my other venue to feature Tito's, for example. But I think that it's easier to control that from the operational standpoint.
Let me just say this. When I had my restaurant, I didn't have a beer and wine license, at least not at first. It was more or less a high-end delicatessen in the financial district. And we didn't have the ability to have liquor sales or beer sales. We had to make all of our money on food. And I felt like I was, a little handicapped there in San Francisco, as rising costs with labor and all the other rising costs. It's like, how much were people going to pay for a sandwich, right? And I can remember this one specific time when avocados reached a really high point. I think there was like some nonsense with the cartels were basically telling people not to cut their avocados, and they were controlling the price of the avocado. And my number one seller was this turkey bacon avocado sandwich. And at some point we had to basically say, we're not serving avocado right now. It was costing us money to put it on the sandwich. So we, had to be quick and nimble and make that change, even though we knew it was going to affect our customers. It was just, from a business perspective, we had to go away from the avocado for 30 days or something.
All your eggs are in one basket, and that's no pun intended there. But I went through that too, and avocado toast was the first thing that came off my brunch menu. So I remember those.
The cartel, man.
Yeah. We probably shouldn't talk badly about them on our podcast. It could come back to haunt us.
I love the cartel. What are you talking about?
You sent me a very interesting article which speaks to certain dining trends, drinking trends, but the downward trend in red wine in the Bay Area or San Francisco was a very staggering number year to year.
It was crazy, right?
30% down. I just don't get that. How did that just all of a sudden happen?
Red wine. And all the wines that I like red wine the most. So it's definitely not down in this household.
Right on, right on. All right. So we know that liquor licenses, are more appealing for many of our buyers these days just because of, margins and the ability to control that a little bit better than, being limited to only have food be the determining factor of your profitability. What other things are these buyers looking for and wanting in 2025?
I think that leases are so important right now. And I'm seeing a lot of buyers who are not looking to sign up for a slightly higher than market rate. And they're really checking the landlords and saying, look, you know what? No, I'm saying no to that. And so I think another thing that really dictates how well a listing does is the lease and the landlord. If the landlord is coming off uninterested in having a conversation, a buyer, that's like a red flag immediately right there.
Yeah, slam dunk. I mean, leases are paramount and they always have been. But right now, like you said, buyers are not willing, they're less willing to budge or less willing to make an emotional decision on signing a lease based because they love the space or love the location. It's not happening. I'm getting pragmatic buyers and lessees come in and I say, I think we're presenting a good lease rate currently on our advertisement or listing. And they say, no, let me stop you right there. I need to come in lower for especially years 1, 2, in order to set myself up for success and also plan for the unexpected. A lot of my buyers and lessees are saying, I don't want rent to commence. They may be open to paying the triple nets or a very discounted base rent for year 1, but they have an either or clause of, I want 6 months free, or I'll start paying rent upon the type I get my conditional use permit or whatever it may be, that they can open and operate, because the delays from many counties on planning, zoning, and other things are really been a huge thorn in buyers' sides and new tenancies and such trying to get open their business. So it's been real hard for them to actually budget for a reasonable timeline to get open and start making money. So a lease is paramount in that, right?
Yeah, absolutely. I mean, the landlord is almost like a partner in your business. And although they're not really your partner, you really need to understand who you're getting into business with, because throughout the course of that 5 or 10-year period, there's going to be ups and downs regardless in every business. And you just want to make sure that your landlord and you have a great relationship, and, setting expectations in the beginning as far as like what you're willing to accept and what you're not willing to accept. That's how you want to go into a lease.
One important thing from our role, Patrick, is that we also need to give examples, give comps, and really present a case that, that we're advocating for our buyer in these situations, that what we are asking for in this lease, maybe in amending a lease assignment or a new lease, the things we're asking for on behalf of our clients are reasonable, and they're reasonable for what the market is in 2025 to set them up for success. No landlord wants a revolving door of tenants, but some are stubborn enough that keeps happening.
And that's on the landlord, right? If that's what they're looking to get, the highest and best, they're probably going to have really quick turnover. I mean, if they want prime location and they're asking $3 over market, then that's on the landlord at that point.
Yeah, in my experience, I am seeing a step in the right direction with how landlords are reasoning and what they're open to. So that's a good thing. I don't think I often said that in years past, but we're seeing it. So leases are paramount. That's a really big concern. What about just through a buyer's lens, what about what they're looking for as far as revenue growth, profitability growth since 2020? Anything you want to add in that kind of category there? Because we see a lot of different trends in different areas and for different businesses. So it's been kind of all over the place.
Yeah. I mean, I think, the capacity, they have to have upside, right? If you have, maybe you have a smaller restaurant for people, for buyers who want to be able to control their costs. They're never going to do higher than a certain point, but they're probably, the floor, what they may end up losing isn't going to be really, all that much, right? Whereas you have the other buyers who, this is a high risk, high reward type situation for them, right? They want, a larger restaurant, 3,000 plus square feet. They want to have the capacity to be able to really hit it hard if business goes well, right? And so I'm seeing a lot of some buyers that want these larger format restaurants so that they can make real big money.
Yeah, there's definitely a lot of more opportunities out there to get in with a good lease and get into a larger restaurant in a good location these days for less money. I think A lot of my clients are playing it more safe and wanting to go with that small to middle tier restaurant just so they are being somewhat cautious. But I totally get what you're saying. Some folks want to, they want to shoot for the fences, and God bless them for it.
Yeah. Yeah. And I mean, just everybody out there, I mean, if you think about it, Andy and myself, we handle areas all the way from, east of Sacramento to, all the way down to the central coast of California. So our region between the two of us of what we have done and are currently working on is very large. And so we do see an array of different buyers and sellers and all the things in between.
Yeah, absolutely. Which adds fun layers to each of our deals and business relationships. So it's good. I think some on the flip side of there are things that obviously that are hard nosed for buyers these days. And I'm going to throw it out there first. Overpriced businesses. They're going to sit. They're not going to get attention. And then if you are the agent that listed it overpriced, you're going to get a lot of eyebrows from your sellers going, well, why did we price it here? And why aren't we getting interest? That's why Patrick and I, we given our background and how many transactions we've done within this niche of the hospitality world, we don't overprice. We base it on the numbers. We don't base it on future potential. You base it on historical data, their revenue, their profits. Of course, we take into consideration if it's a strong lease and the design of the space and equipment. But if we overprice something, we are very clear with our clients. It's going to sit. We're not going to bring attention. It's not going to get attention.
Absolutely. I mean, you have to understand that both Andy and me both owned restaurants. We absolutely want to get the most for our clients, but we have to be realistic and we have to be able to justify the price that we came to. And I can guarantee you, as soon as we start talking to those buyers, they're going to be like, how did you arrive at this price?
Yeah. So we need to be able to share the answer of how we came to this suggested list price and also the financials that support it. I think that can be a very rookie mistake. It also can be a mistake made by a commercial broker that doesn't work in the restaurant world very much. That, hey, the perceived value is this. Let's slap this number on it and see where we get with people. And our SBA lenders that we work with pointed out on a regular basis that they find you and I to be very sensible on where we're coming in and without undercutting, the importance of us wanting to get our clients the highest price. Earlier we were talking about, some of the different trends in drinking and, the benefits of having a full bar, also seeing some of these new trends about people drinking less wine or drinking less in general. I think there's some parallels to high-end fine dining concepts have thinned out. I just see that there's maybe a little less consumer demand for these super high-end restaurants or even just, fine dining restaurants in general. I think some of them are cost prohibitive. I think there's a lot of good options for people that they feel a little more comfortable that their, affordability factor is big for them. So, given that some of these high price concepts and restaurants have really thinned out over the years, what trends are we seeing kind of take their place? And I'm seeing more fast casual, friendly, and approachable, everything menus, I call them sometimes, everything menus that are affordable. Something for the family. What do you see?
Yeah. I mean, let me just step back a second on Michelin rated restaurants or these, chef driven concepts. I'd love to put this message out there. I think if you are a chef and you want to have a Michelin rated restaurant or, a chef driven kind of concept, make it so it's not tied to you personally, because when you do go to sell your restaurant, you don't want it to be, based on you and you only, because you won't be able to sell it. You'll be able to sell it for an asset sale. But if you can pull away from that restaurant and it's still, XYZ restaurant with or without you, it's going to be worth a lot more money.
That's amazing you brought that up. And I know that you've had some more than I, but some experiences with that. When it's a celebrity chef or chef name driven concept, hey, they're human too. They get tired. They want to sell. They want to move on to do something else. Well, guess what? We're not selling your name unless you're Gordon Ramsay. You know what I mean? A buyer can't come in and be you, this star chef. So there's no value in that. So that's a really good point. I do see that more of these Michelin rated, Michelin winning, and restaurant concepts that are getting many accolades, they've tended to be more authentic, culturally authentic, ethnic, and more comfort food driven over the past year or two. It's interesting. It always previously seemed to stay in this super high end, eclectic and kind of unattainable for everyone. But I've seen a shift in that. In these awards and what they're, who's getting the pat on the back with these awards and accolades.
Absolutely. And going back to what you were saying, yeah, I think the fast casual or, friendly concept where the whole family can go, those are very popular right now, right? People aren't looking for, white tablecloth. I know everybody knows this already, but those concepts are done. The new crew of people out there eating don't want stuffy.
Yeah, no, it's true. Well, let's kind of recap on what people do want, what our buyers do want, and also if you're a seller and you've checked some of these boxes that we're just about to recap on, then you have something really quality to sell in 2025. So don't hesitate to reach out if you're interested in learning more about that. But what did we talk about? We talked about location. Such a cliche phrase, but it's still very true. The locations have changed though. Less urban downtown areas and more suburban areas.
Let me just say this right here. I know that when I was looking for a restaurant, I was really like, this is what I want. This is where I want it. And now now that I sell restaurants, I would go about this whole equation so differently. I would look at buying a restaurant that's making X amount of money right now, high revenue, high profit. If it's doing that must mean it's a good location to begin with, but go into it with a slightly different equation. Look for the revenue and the profit versus like
tunnel vision of just looking at it.
Yeah, pigeonholing yourself to this, I got to do this location.
I got to be on this corridor. I have to be on this corridor. Yeah, absolutely. I think a very close second as far as what buyers want right now is they need a lease that fits the market. End of story, period. Your lease has to make sense for 2025.
Yeah, I mean, just tell your landlord, a lot of times your business isn't even coming from that space itself anymore. It's coming online. So it's not space specific anymore. It's, you have customers coming from, you don't need to be on Main Street anymore.
Yeah, absolutely. Well, Patrick, you put a lot of weight on this today. Is make sure you're looking for a business that has strong volume, strong profit, so you know what you're getting into. And hopefully there's less risk in taking over a business like that and investing in your future in a business like that. Yeah. And again, I think we touched on, having a liquor license or little other details that may really add to profitability or your ability to control margins. But I think we kind of tapped on all the main things that buyers are looking for.
So I have a question for you, Andy.
Yeah.
Given that you just went to Japan, I want to know about your most memorable experience dining in that entire trip. Yeah.
Oh gosh. Okay. Out of the 24 that Tanya made me do every single day for 3 times a day, let's see. Oddly enough, I'm going to talk about breakfast. There is very ornate and beautiful and healthy, health-focused traditional Japanese breakfast. They may bring you this larger box, but it has literally 12 to 20 different small plates. One of the ones I really enjoyed was one that was focused on beauty. And I'm so absorbed in my looks, but no, I'm just kidding. Is that this beautiful ornate box came to me that had, anything from fermented and lightly pickled items. It had some, cured fish and other things. Of course, high quality eggs and so on because it's breakfast, along with high quality warm milk and tea and all this. So the variety was great. I thought I would have to go take a nap after it, but I felt so good inside. I felt so, happy and healthy. My body was like, thank you for that. So I thought the breakfasts were the most outside of the ordinary dining experiences that we had done there.
I never think of breakfast when I think of Japanese food.
No, nor do I. And Tanya found one very high one, which was just a great experience. And the other was, it was under $20 in this. It was only 8 seats. It was absolutely stunning. And it was just so beautiful. So the value right there is the value in Tokyo and Japan right now to get amazing food is making us look bad over here. I'll tell you that.
Yeah. So tell me one last thing. How we think of Japanese food here in the States versus what Japanese food is in Japan, is there some major
It's 2 separate ends of the spectrum. My restaurants in California were heavily Japanese focused because my partners are from Japan. Unfortunately, I do have to say that, their commitment to the trade on how they're prepping food, presenting it, and the care they take in presenting it is amazing. I think that we focus too much into more sauces, more sugars, more stuff, okay?
Yeah.
We don't need more stuff. Let the ingredients shine. Yeah. That's the difference.
Cool. Right on. Well, let's wrap this up. Let's get a good start to the year here, Andy.
Sounds good, Patrick. I look forward to it. And thank you all for joining us again. We're going to get back to a pattern of having really exciting guests on and then really tackling some fun, tough, and exposed topics moving forward. So we hope to keep you guys entertained in 2025.
Thanks, everyone. If you enjoyed today's show and don't want to worry about missing an episode, you can follow the show wherever you listen to your podcasts. And if you found today's episode interesting or useful, please share it with someone you think would benefit and consider leaving a rating and review.
Reviews help restaurant owners or buyers just like you discover this podcast and benefit from the important topics covered in the episodes. Your opinion matters to us as a listener, so feel free to leave topic suggestions and feedback for us, as we will use these to tailor the episodes to you and help you get the most out of listening.
Thank you all for listening to this week's episode of Restaurant Deal Making Exposed. If you're considering selling your business and would like a free consultation, reach out to Patrick and Andy at therestaurantsalesbroker.com or visit www.therestaurantsalesbroker.com to learn more.